Morning guys. How are we all doing? How's the Zims? TJ, how you doing? Alessandro, Sharif, Iron Man Trading, Stanley, Zypher. Hope you're all doing well. Bit of a change in scenery. Decided to move where I was into a different room. But yeah, sorry. So I was a little bit busy this morning. Yeah, sorting all that stuff out. How's the neck? How you doing? Literally arrived in Bethlehem today. I'm so tired. Shame, Zeems. I hope you hope you're not struggling too much. TJ signed up for the membership last night. Really excited to get going with you. Yeah, I saw that, TJ. I did send you a message on the website, so you'll see that just everything you need before you get going, and like a little welcome. So yeah, excited to have you on board. Yeah, welcome. I hope that you find it beneficial, and I'm sure that you will. We do it very differently. Hi Sharif, how you doing? Great choice, TJ. Yep, great choice. Hi Balas, how you doing? Hope you're doing well, guys. So before we get going, just making sure everything here is sorted out properly. Okay, just gonna give it 2 minutes and we can get going with the breakdown. I've more or less marked out my charts already, but I'm gonna go through everything with you guys just to make sure that you're all on the same page as I am. Just gonna talk a little bit now about GJ. Shocking, everyone on the Telegram group, you guys saw, I mean, under this level, currently where we are, I would say not good. All of this and all of this. I'd much rather, I know we could start forming a support chain breaking below this level, but the problem with that is that the range isn't the greatest. I mean, it's only about 10 pips, so I don't think that that's going to be enough range. The better choice is definitely going to be waiting for this candle close below this 153 kind of 650 level. We have much cleaner candles, although we do have these rejection wicks. I think it's going to, by the time we get down to that level, we're going to have got a very strong idea that there's a lot of bearish pressure in the markets. See you in a new room. Yeah, I moved all my stuff this morning. Just decided needed a bit of a change of scenery. Okay, let me just remove all this stuff. Let me go to the weekly and let's talk about GJ first, just before market open, and then we can get into gold as well. So we're going to look at GJ. You can see we are still bearish on market structure on the weekly, because obviously now it's past Wednesday afternoon, so we're going to look at the current weekly candle, right? Currently, weekly candle is bearish at the moment. Obviously, it's very weak bearish. So again, if you don't want to take into consideration the weekly structure because of that, you don't have to. But if you want to obviously establish a bias on all time frames, you have to look at the current candle if it's past Wednesday. So we're going to say our market structure is bearish. Obviously, you can see after we formed that weekly resistance at that previous level of weekly resistance, there was very good opportunity to scale into moves down here, correct a lot of this move up, because basically what we're doing is continuing this weekly range which we've established. So what it looks like we're just going to do is play around in here for a little bit longer. You can also see something interesting to look at. Not a lot of people look at the monthly time frame, but we basically have a barcode forming on the monthly time frame, so we're respecting the monthly resistance, which is where we closed in December. We closed on a level of monthly resistance, and then this is kind of the monthly support level, so we could find ourselves over the next couple of months finding our way back down here, and then if we respect it, coming back up. So that's just looking at the much higher time frames in terms of where we could see ourselves going in the long term. If we're going to look on the daily time frame now, our structure is still bullish. Remember, high created by this point, not exceeded. It's been like that for ages now, so we're going to maintain that for a little while longer for sure. You can see I was talking about how we this was maybe 2 days ago, so when, yeah, it was on the 25th, so 2 days ago, I was talking about how we've had this strong bearish push, and what you often see after a strong bearish push is some possible exhaustion, so followed by maybe 1 or 2 bullish candles, which again doesn't mean we're bullish in market structure or anything like that. No one should be trying to plan on taking some long-term buys just yet. You would definitely need a lot more confirmations to do so, But what you can see we have done is respected a daily level of support. Now we know daily levels of support are pretty strong. Same as a weekly level, they are very strong key levels. What we would then obviously want to see if we're going to basically correct a majority of this clean daily move up for those 3 days that were really, really bullish. What we're going to need to see now is maybe a daily candle close below this level of daily support. So we don't want to respect this daily support if we want to see that further bearish continuation. What I also really want to see is a bearish daily candle form, because what that could then indicate is obviously we had the support level over here. We're kind of reacting at it. Obviously we did pull a bit above it, but if we start seeing reactions at this sort of level, it can definitely indicate that we'll retest this low that we formed over here. So that'll be basically our break and retest. And then hopefully what we can do after that is create more a lower low basically, or a new low. And then we can continue basically this overall bearish move down to then also play into that weekly range which we were talking about. So on the daily time frame, although our market structure is bullish, I do see potential because of this strong bearish push, and obviously looking at the higher time frames, that if we start forming some daily resistance at these sorts of levels, we'll retest this low which we created and create new lows and hopefully continue bearish. We need to see this daily candle form resistance. So if we then look at the 4-hour time frame, our market structure on the 4-hour is bullish at this point because we had our low over here. This is our 2 candle pullback which created the low. You can see we exceeded that point and had a candle close above that area. Therefore, we are only going to be bearish in market structure once we exceed the point which created this high, right? So we're going to look for the 2 candle pullback. There's one, here you have 2. So when we get below this area, that's when we are going to be bearish in market structure. And what that's also going to be is the retest of that daily low I was talking to you guys about. So obviously that's the low. And then if we get back down to that level, that will also be where our 4-hour bearish flip will be. Unless obviously we form a new 4-hour high, and then it's going to be over here. So it'll be at an earlier price. So on the 4-hour as well, we can start marking out some zones. You can see here we still have our daily support level marked in, where we formed 4-hour support on that daily support level. Now we also have a 4-hour resistance level, which if we break above, we also have a level of 4-hour resistance right next to that. So it's not really going to be very clean candles. Now we're going to drop down obviously to the 30-minute time frame and see what we have here. On the 30-minute, it doesn't look the greatest. I definitely am not happy with the price action, especially in this sort of area over here. It's going to be very, very risky taking sells into this chop. So you got to be very aware of that. We can mark out a level which everyone else in the Telegram group as well as myself think is a pretty safe area to sell below. And that's going to be over here, because then again, over here, because then we're going to have these sort of clean candles to play into. I know we do have these rejection wicks over here, which is quite risky to trade into. You know how rejection wicks can be, but then if we wait for that candle close below the level, that's a strong indicator that, you know, even though there are wicks here, we should be able to push through them. You can see where price currently is. We are currently forming consolidation on the 30-minute time frame. There's no way we can really determine which way price is going to go. I would say if we're going to be looking for some buys at the moment, because our market structure is 2v2. You can see on the 30-minute, this was our high point which created the high, because these were our 2 candles and we got a candle close below that point. So this is technically our low because we haven't exceeded these wicks, and then this will be the area which created the low. So we are bearish on the 30-minute market structure. We're bullish on the 4-hour, bullish on the daily, and bearish on the weekly. So that gives us our 2v2, right? So we have a 2v2 buyers sellers, meaning that both buys and sells can both play out. If I'm going to be looking for some aggressive buys, this is a really good level to be looking for some early buys, because what we're then expecting is, okay, we have at least 2 time frames which have market structure on our side. So if we do get a candle close above this level of resistance, we have clean candles to the left, we should maybe be able to get up to this 154.570 level. It does by technicals make sense. We just need to see the candle formations, and then I'd be expecting us to be able to get up to about 154.540. Sells, I don't know how confident you guys feel or how risky you guys are feeling at the moment, but I would say you can maybe try and look for some very, very aggressive sells below this sort of level, but I'm not interested in that at all. You guys know I'm very particular with the setups I like to see, as well as being quite a decently safe trade at times. So I don't really want to trade into this. So that's going to be a no trade zone. We are currently in a no trade zone. So this makes our one buying area and this makes our selling area. I would say we can maybe get down to, if we break below this level, maybe 153, 180. So I hope that all plays into the same ideas as you guys had. Like I said, I know on the Telegram, everyone has pretty similar ideas. We all are very aware of the current range we're in, and we're aware of the choppy price action, which I think is super important below this level. The choppy price action is going to make it quite tough to find those sells. Obviously, if we get a candle close below this level, and then the next candle is going to be our open candle, and then if we get that wick up and push down, there is of course possibilities for us to continue bearish for sure with that volume that comes in during a market open. But it's just not the safest options possible. If you're going to be patient, just wait a little bit longer and you could get some moves at a later stage. If what ends up happening is we do create this strong bearish move, what I would then wait for if I miss the move is a pullback, form some resistance at a previous level of support, so that's your break and retest, form some minor support, so that's going to be on your 15 or 5 minute time frame, and then retest the lows once we break that minor support. Because remember, if we're in a downward trend, at the moment I know we are in a bit of a shared trend because it's 2v2, but if we are in or forming what seems to be a downward trend, what we can expect is former levels of support to turn into levels of resistance. And once those levels of resistance have formed, we look for that minor support and then want to retest the lows once we break that minor support. So that's what I'll be looking for to get sells at the most optimal entries, rather than trying to take sells. Let's say we do push all the way down here, taking sells at the lows, because this is probably going to be the worst possible sell price, with the best having being up here. The problem with trying to get the best possible prices is those are always the riskiest entries. So we know this. If we want to take the risky entry at this point, not taking into consideration this, yes, we're going to get the best selling price, but what are the confirmations that price is going to come down to this level? Not very high. So yeah, we just need to play it on our probability levels, our confirmations and our confluences, and let's not rush anything. It's been a pretty good week. I've taken, I think, 2 trades this whole week. And we're on Thursday. Maybe I had a runner which I had open from a GJ sell that I took that impulse entry. I think it was over here. Yeah, it may have been on the 24th, which got closed out at break even. Just a runner yesterday. So that does show up as a trade from this week. But other than that, yeah, I took GJ sells yesterday. Let me just quickly go over those before. Oh, well, we only have 5 seconds. So let's see how we close quickly. Yeah, I mean, it seems to be like we are respecting this range. You can see we've closed on a level of support. So, and we closed within the range. So obviously now we're going to probably get that volume. But whether we're just going to break below these lows and continue bearish, I'm not very interested at all in taking that sort of trade. I will go quickly through the buys from yesterday's GJ trade. Sorry. It's very, very simple buys, guys. Based on the 4-hour time frame, you can see we had, let me just mark it out for you, we had this level of 4-hour resistance. I'll mark it in blue. Yeah, this candle, this 4-hour candle, did not respect the previous level of 4-hour resistance. You can see that we closed very strong bullish. This next candle wicked down nicely, gave us our stop loss. We then broke above the previous 4-hour candle high. We had clean 4-hour candles to the left. We also had clean 30-minute and 1-hour candles to the left. That gives us a very, very good chance to trade into clean candles. Trading with, I don't think the structure was very much so on our side, but it was just such a good candle confirmation that it was a very hard trade not to take. And in those situations, you just need to manage your risk if you feel a bit uncomfortable. But what I thought was a very nice trade. Could be coming down a little bit here. Again, guys, if you want to take the risky trades or take a risky entry here, by all means go for it. Your entry should have been at the break of the previous 30-minute candle low. I mean, price has come down quite nicely. I'm not in this trade. Not my sort of entry at all. Rather trade safely. I said on the group the other day, you know, missing a trade is infinitely better than losing a trade, because you can never lose money from missing a trade, only from losing a trade. Yesterday's buys were so good. We even got the catalyst candle pre-London. Yeah, yesterday was not a bad day at all. Very, very, very nice day. All in all. we'll get into gold as well just now. I just want to see how this plays out, because if this does determine that we are obviously going to continue bearish, I think that there's a good chance for maybe that bearish continuation throughout the day. Obviously, I do on the daily time frame want to see this daily resistance form, and then I think there could be a great opportunity, especially if we don't respect this level of daily support, that we can maybe continue bearish down to these sorts of levels maybe by the end of next week, because obviously tomorrow is Friday, so we are coming towards the end of the week. We do want to see this this weekly candle close decently strong bearish. We don't want to really see it form either weak support or strong or a doji candle. We want to see a strong candle of some sort. And on here says he's in the sell. Good luck in the sell. Make sure you manage your risk. Be aware that we are coming up to a level of support, so get ready to possibly see a bit of a rejection, or we could, with the volume that we have, break straight through this level of support. But yeah, I would definitely, if I was taking this trade, I would have this level marked out as where I would probably be securing the whole position. Well, it definitely a percentage, if not the whole position, because below that, again, there's not very nice price action. But yeah, again, guys, not my type of trade at all. You guys know how I trade by now, so interesting to see, nice to look at, but not involved. If we do fake out of the range and then start pushing bullish and get back above this level again, guys, I am very tempted to take those. How should I do my stop loss? You shouldn't really have to ask me about how to do a stop loss, but what I would say is your stop loss should be placed above the current candle. That is the technical level for your stop loss. How price has pushed down already so much, if price comes back to your entry, I would suggest closing half of your position, and then obviously if this candle flips bullish, I would close another half, and then the rest of your position will get closed at the stop loss level. That way you're going to be losing a lot less than what you had planned out to be. You would have closed half twice before hitting your stop loss. If I lose half, then pull out. To secure profits after 80%, I secure 80% of profits, 80 to 90% of profits, as in that's the amount of my position which I secure usually. But that's always at 10 or more pips. I don't ever secure profits before 10 pips. For me, I don't think trading anything less than 10 pips is really worth it. So 10 to 15 pips, once I start hitting those sorts of levels, I will be securing about 80 to 90% of my original position, and then let the rest of the 20% run. If the rest of the 20%, depending if I use a 20 or 15 lot, obviously if I'm using the 20 lot, then the run is going to be a little bit bigger, just marginally, and then I will close on that as we start hitting 20, 25 pips, that sort of stuff. Again, yesterday though, I didn't close any partials at 10 pips. I let my whole position run up to, let me find the position. I let the whole position run about 22 pips. So it didn't secure anything, just decided, but basing trades on the higher time frames, you're obviously going to be anticipating higher or more of a move, more of a push, and that's exactly what we got as we broke the high here. Originally it took a bit of a while. I mean, there was next to no drawdown, but we're sitting at up about 8 pips, 7 pips for a good half an hour. Then we came down a little bit, then we continued bullish. So it was a nice trade, almost no drawdown, and then didn't secure any of the position, and then secured the whole position, all at about roughly 20 pips. Also, it is on the Telegram group if anyone does want to take a look at that. So if I was in GJ, I would have closed half of my position by now, because this would have been where my entry is, and we have pushed down about 8 pips and then come back to your entry. Now that's an indication that price is obviously not going to be continuing or not likely to continue in that direction yet. So now the next place I would close half is when this candle flips bullish. So I would have closed half again there, and now my stop loss would have been above this current candle. So by the time price hits my stop loss, I've already closed half twice, meaning that what I was willing to risk was only going to be, let's say, again, a good example is always 1,000. If you were willing to risk 1,000, if you can even manage to get that down to 800, 700, you've lost less than what you had planned to lose. So Anon, I know you're in this sell. You should definitely be out of this sell by now, and you should have managed your risk twice on that trade. You should have closed it when you came to your entry and when this candle flipped bullish, and hopefully that also teaches you a lesson of why not to trade into these risky sorts of areas. But everyone else who just managed to watch that, well done to us for being patient traders. Took a massive L. It's fine as long as you managed it. Withdrawing. Don't know what that means. Great watch. Yep. GJ Choppy. Don't need to even try and get involved in this. Don't know what brokers you guys are with, but a lot of people ask me which broker I'm with. I'm with IC Markets. I use a raw spread account. By far, one of the best brokers I've ever been with. Really, really good. They don't take a percentage on deposits, and they have a really, really good withdrawal sort of speed. So it normally takes, can take up to about 7 days, sometimes 10, but there's been times where I've got withdrawals within 4 days. And very, very reliable. Their help center is amazing. Never had a problem with them. So if I can suggest switching, if you guys are thinking of switching to a broker or not happy with your current broker, go for IC Markets, choose a raw spread account, and you'll be as happy as can be. Okay, let's check gold out because it looks like GJ obviously faked out to the bottom side there and it's going to continue. I mean, there are a few gold charts in the Telegram group as is, so we have talked about that a little bit this morning, but let's just check out gold anyway. You can see the current weekly candle is extremely bearish. We came up and broke last week's weekly high, and then we just did a reversal. There's been a lot of fundamentals this week, which has highly impacted gold. Yesterday we had a couple of high impact folds, as you guys saw FOMC last night. You saw how much gold came down last night. And then the previous day there was also some US dollar news. Medium impact, so nothing too serious. But gold has been very highly impacted by fundamentals this week. So that's why it's obviously acting the way it is acting. So on the weekly time frame, we are obviously bearish in market structure. You can see on the daily time frame yesterday, we had a very, very bearish day. We came down to this level of daily support, which we more or less closed on. Now, this next candle, you can see has already broken yesterday's daily low and is coming down into this region of daily wicks, which obviously on the lower time frames is going to be support levels. So you can see once we drop down to the 4-hour time frame, this is your support level that we're currently on, and then there's a support level below that. So what I'll be looking at on the 4-hour time frame is if we break this support level, where's the previous support level below that? And it's right here. So now we're going to have to look, is there going to be enough range? Because obviously on the 4-hour time frame with this massive wick, that's a 30 pip wick. It's not going to be necessarily choppy on the lower time frames, but it may not be great. So what we may need to wait for is shift this down and wait for a break below this 1803 level. But what I would suggest is keeping this marked out, this level of 4-hour support, and then we can drop down to the lower time frames and determine whether there's going to be possible entries on the lower time frames based on clean candles. You can see our market structure on the 4 hour. This was our high. This was the point which created the high. You can see, although we had our 3 candle, we had 2 or more candle pullback over here, you always take it from the lowest point, because you can't say that this created the high, the bottom of that point created the high. So we are all the way down here now. So we're most certainly bearish market structure on the 4 hour, bearish market structure on the weekly, bullish on the daily. And then this is the point which created the low. You can see we had 2 bullish candles. So our market structure is bearish on the 4 hour. Now we're going to obviously look for our zones on the 1 hour. You can see here we obviously have this long rejection which isn't ideal, but it is, you know, if we get a strong candle close below that level, we can possibly trade that level. I'd also say buys above 18, 17 are obviously going to be risky. It's going to be slightly counter trend. We're very bearish at the moment. Otherwise, what safer buy levels would definitely be is above this 1822 level. And why is that? Because this is where our structural flip level is going to be. Here's our low, 2 candle pullback. If we get a candle close above this level, we're going to be bullish in market structure on the 1 hour. Currently we're bearish, giving us a 3v1 bearish market structure, making sells our bias. But if we come over here, we can have a 2v2, making buys or sells possible. And then obviously we have the clean candles to the left. So there's your confluences once again lining up. As you said, secure profits after 10 to 15 pips, you secure 80%. Is it the same for risk? Once you're down 10 to 15, no, you don't. Risk management is very different to securing profits. Risk management happens at technical levels, such as breaking of candle highs or lows, depending on whether you're buying or selling. Candle flips. So as soon as you see candles not printing in your direction, or what you don't see could be a possible candle basically allowing price to continue in the direction whether you've bought or sold, that is where you're going to be closing positions or percentages of your position, securing, managing risk. So what I normally do is I normally close 50% of my position every time I manage risk. So now let's say in the situation we just had on GJ, your position looks something like this. For example, your stop loss at the time was, let's say, over here. So as price came down, happy days, you know, we came down to this level over here. We then started coming back up. What I'm then going to do is when price comes back to my entry, we've already made a strong push in my direction, so price should just continue. We're also at a time of high volume. If that volume is going to continue, we shouldn't come back to our entry. So what you then do, close half of your position as price comes back to entry. So that's already basically entering the trade with a half of the lot you had initially taken, because you are closing half at 0. So basically that makes your entry half of what it was, and you haven't lost anything. Your next point of which you would be managing your risk, you can either base it on the lower time frames or you can base it on candle flips. So our candle was bearish. I would have closed another half when the candle flipped bullish. Why is that? Because if a candle's flipping bullish, it's obviously not going to be, or looking like it's going to be continuing bearish. And if we're going to sell, we don't want to be seeing bullish candles. We want to be seeing bearish candles. Our stop loss, let's say for example, is then at this level over here. I've already now, let's say I opened a 1 lot, closed half over here, so now we have a 0.5 lot. Closed half over here, now we had a 0.25 lot, and we've already closed half of our loss. So let's say we were down 50, and we were willing to lose, let's say 100. And then by the time price hits our stop loss, we've only lost 75. Because we've halved the lot twice. We halved it at entry and we halved it at our first area of risk management. Well, second technically, because break even was our first. So that is very different to securing profits. Securing profits is literally when you start saying, okay, no matter what, if price gets to 10 pips, we close X amount of percentage, whether it be 80 or 50. It's always going to be at the same point most of the time. Whereas risk management is never at the same point, or not usually at the same point. That's why I always say, guys, maximizing profits comes with practice. Maximizing profits comes with experience and confidence. Minimizing loss comes with practice. The only way you can get better at this is by practicing risk management. It's the only way that it's going to improve. Risk management doesn't just come overnight. It's not something that you just start, understanding. You actually have to practice it. You have to practice closing positions. You need to understand, why am I closing half when this candle flips bullish? Because that's a strong indicator that if we've made such a strong push at a time of high volume, that we're rejecting in this area and we're going to be continuing upwards. I think today was honestly a perfect example of what you should do. What capital would you need to trade with a lot size of 1? Just depends on how much you're risking per trade. I'd say what you'd probably want like maybe a $5,000 to $10,000 account if you want to be safe with that. Let's say 5,000. Sorry, I did get distracted on gold, guys. So yeah, potential buys above 1817 and potential sells below 1807. These buys are going to be risky buys, and these buys are going to be much safer. These sells, obviously we do have this rejection wick, which we are currently looking at, which could be an issue. What we could also be looking at is shifting this up and just taking this wick almost as clean candles, because behind this wick we obviously have clean candles coming down, so we can just expect maybe volume to push us through this level. We've currently also just broken a level of weak support, so this could be a really good point to be looking for possible entries, because we're also at a time of some very high volume. You're just obviously going to have to be aware that there is that wick to the left, which we could reject at any point. We're also sitting on a support right now, so this would definitely be an impulse entry and a much higher risk entry. But I mean, normally when you're trending like how we are right now on gold, so we are trending bearish, and then we're forming lows, forming some weak support, breaking through that weak support after wicking up, often a good indicator that we can continue bearish. We do just need to be aware that we are sitting on a level of 4-hour support. Very, very aware of that. We're coming into some clean candles on the 30 minutes. $10 till this candle closes, guys. So there's two ways of playing this. Obviously you can either take the impulse entry, or you can wait for this candle to close in 10 minutes and then take the entry based on the next candle wicking up and breaking the low of this candle, and your entry is going to be at the break of the low. That's obviously going to be a much safer position, but obviously then by waiting these 10 minutes and only waiting for that confirmation, you run the risk of this candle literally just doing this, pushing, and that's the move gone. But you got to be happy and understanding of that you can't have the FOMO then to when the candle is halfway down here, that's when you start taking entries based on the impulse, because then you obviously run the risk of your stop loss is much higher, price has already moved a certain amount of distance, and that if price does start going against you, then obviously it's going to be a much bigger loss. So the risk and reward of the impulse entry is that you take it at the earliest possible price, but that you're running the risk of the low confirmation. The problem with FOMO that comes in is people then take the entry based on FOMO on the impulse still. So there's still lack of confirmation, but now they haven't even got the reward side of that, which is the most ideal entry. So the reward obviously of the impulse is your entry level is the best. It's the earliest possible entry. The risk of it is lack of confirmation. What FOMO does is it throws all that out the window, and people start entering into it once the impulse is already kind of done its major impulse, and it starts getting down to these bottom sorts of levels, and then people start wondering that why, when it, you know, the people who got in at the beginning here have secured their profits once price comes down here, but people are hopping in down here, and then when price starts retracing to do the retest on the low time frames, people start wondering, why is price going against me, and why is my loss so much bigger than everyone else's, type thing, because they've already all gotten out of the trade. Impulse entries are not meant to be long holds or anything like that. It's literally meant to be to catch small ranges. So much safer to wait for a candle close in this situation. Please guys, if you haven't, do remember to leave a like on the stream and sub if you aren't subbed. I would really appreciate it. not really much happening on GJ or gold at the moment, guys. GJ is obviously trapped in this range at the moment. Would obviously be nice to see a nice strong candle close above this level, or a nice strong candle close below this 153.610 level. But again, to get down to this level is going to take a little bit of patience. We need to maybe see a bit of a bearish push, then we can expect maybe some exhaustion, and then we might only get that continuation. So let's just, obviously we don't have much choice, but let's just be patient and not get tricked into taking any super early entries or anything like that. Anyone taking impulses on GJ this morning would have been burnt by now. NAS buys, sorry Zems, let me check that out for you. Let me check. Well, I mean, maybe, I don't know how long ago you said that, but this candle seems to be pretty bullish. It's going to be, I think, based on the 1 hour candle. Yeah, based on how Nasdaq's moving, I mean, it definitely wouldn't have tempted me into it. It's very bearish in market structure. I actually noticed from looking at Nasdaq the other day how bearish we are in market structure. That would have been an impulse entry, and based on all the time frames, it looks like it would have been a counter trend impulse entry. So definitely would not have been interested in that. Out of what I would be waiting for situations like this is, obviously we're going to have maybe the strong push, and it could even push up to, you know, this level. But then what you can be planning on is, okay, the way we trade is we trade the trend, right? We want to trade with the trend. It's as simple as that. We want to make sure that we're on the right side of the market and we're trading with the trend. So if price goes up and people are shouting buy, 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 it doesn't matter. Let them shout buy, 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 because what we can then wait for is for some resistance to form at this level and then trade the trend. So we're going to get the sells. And then it's going to be happy days. We're going to have made our profits. When people start seeing these strong pushes and then they start thinking, oh, okay, we're missing out on trade opportunities. That's just because they have no patience. Caught a type B on the 15 minute. Yeah, but again, no need to take that sort of a trade. I know though maybe it did work out today, but there's going to be 9 times out of the 10 days that this sort of a trade does not work out. 15 minute first of all is very low confirmation, and this is all counter trend. Trade the trend. It's as simple as that. GJ obviously at the moment is very, very, very tough to determine, you know, in the bigger picture where we could be heading. Obviously based on the daily time frame, I'd be liking to see this resistance form. What I am worried about is obviously if we're going to start forming some resistance here but then respect the support level, we could see ourselves ranging a little bit on the daily and then either deciding, okay, we're going to be heading bullish, or deciding, okay, let's break out of this range and start hitting bearish. We've had some very, very clean moves on GJ in the past couple of days. So you can see how these daily candles have been really, really bearish daily candles. This was all set up from the weekly candle, guys, from the 2 weeks ago. So this weekly candle forming that resistance, respecting the high of the previous weekly candle, that's a very strong indication that seller's pressure is very high in the market, and seller's buyer's pressure is obviously lacking in the market. Buyer's pressure is dying out. Obviously now if we're respecting a weekly resistance level, on this next candle we can expect to then start seeing some very strong bearish continuation if we then break the candle low. So that kind of set us up for the position that we're in at the moment. I know a lot of people, some friends of mine who took some nice long-term GJ sells and have only recently been closing out, and I mean, yeah, they did really well out of that. So it was a nice long-term hold if anyone was trading GJ. At the moment, obviously, we have had like a little bit of this, basically, I would almost say bullish little push over these past few days, but you can see obviously that has just been the last two daily candles were bullish, which is exactly what I said was going to happen on the when I streamed on the 24th. So let's see if the next part of that prediction, which is me then saying if we do form some resistance, we can retest the lows and create a new low. Let's see if that does end up happening. Will be nice to see, of course. Gold, on the other hand, is also pretty useless at the moment. My bias is definitely sells. I mean, just look at how strong yesterday's daily candle was, as well as today's daily candle being a very strong bearish candle. So obviously the current daily trend is going to be bearish. And then obviously our market structure is bearish on 3 of our 4 key time frames. And if that's the case, then I will most likely only be looking for sells. What that does also mean, guys, is that even if we don't break below these sorts of levels over here and we start creating a little bit of a pullback, if we then start forming resistance while respecting structural levels, remember I always talk about that, guys, the importance of respecting structural levels, then there's a good chance that if we respect the structural level, form some minor support, break through that minor support, then that's when you can scale into those sells to retest the low and possibly create a new low and continue bearish. Because remember, guys, 90% of the time when we create a high or a low, we're going to retest that. So if we get a nice pullback and then have the clean candles to retest that low with to the left, then there's a good chance of that continuation. EQL has been taken out and stop hunt, we're going up. Okay. On GJ, I mean, there's definitely the range to trade into, so if we do start going up, that'll be fine. Also, guys, it's really important to remember that no matter if there's people shouting the odds saying, you know, price is going this way, price is going that way, let them believe where price is going to go, as long as we have our zones drawn out. So we have our trading areas where we want to actively trade and we have our bias as well, then we should never really be too far off with that sort of situation. If we get setups in our current zones that we have marked out and it's trading not counter trend or trading slightly with the trend, then it's going to be fine. So yeah, very important. Buys at this level will also obviously be quite nice because we're not buying at such a high price. 154, 173, possibly to retest 154, 547. So that's also going to be really nice entry. You know, it's not like we're buying above this 154, 686 level, which is already a high which has been created. We're kind of going to be buying to then retest this high. Based on the 30-minute time frame, we also obviously created that high on the 1 hour. If we can form some 4-hour supports as well, that'll be great. That'll also be a bit of an added confidence as well. We taking the gold sell. We not taking anything. You can take the gold sell. It's no we in trading. Something very important to start realizing. There's a me, myself, and I. Market structure on gold Stanley on the daily time frame is obviously we're still bullish. So this was our high which we had created still a while ago, and then this was the point which created the high. You can see we have not exceeded that point, nor have we created a new high. So that way, the only way that we will flip market structure is if we break below this area over here, because then remember that is exceeding the point which created the high. That's our high. This is the point which created the high. We need a candle close below that level. The only alternative is if we created a new high, then we would obviously have a new point which created the new high, right? So let's say, for example, this next daily candle just pushes up to it won't happen, but let's say that happens. Then we look for the 2 candle pullback, and then that would be these 2 candles. So then our structural flip will come below this level as opposed to this level. And why is that? Because this would be our new high that we created, and this would be the new level which created that new high. So this becomes our structural flip level. So remember, you always got to keep updating your levels of structural flips, guys, if you're creating new highs and lows. Obviously, that happens a lot less on the daily than it does on the 30-minute. That's why 30-minute market structure is a lot more choppy than, let's say, daily or even the 4-hour. 4-hour can sometimes take a couple of days to flip its market structure if we have like a very strong move. A good example of it would be here. You can see here we've created a new low after flipping our market structure. So what we would then, our market structure would have flipped in at this point. So what we now need to understand is that if we want our 4-hour market structure to be bullish, we have to exceed the point or the leg which created our low. And that's all the way up here. Now for price to get all the way back up to 1854, it's going to take quite a while. So what normally ends up happening is we'll get let's say we get a little bit of a pullback here based on the 4-hour time frame. So we get, let's say, a couple of bullish candles, and then we continue to create a new low. Then this becomes our new point of structural flip. Why? Because this is our new low. So that's what I mean by you need to keep on updating it. This doesn't stay our low, and this doesn't stay the point which created the low, because obviously if this is a new low, we may or may not. Obviously, if we only get 1 bullish candle and then come down, then this does remain the point which created the low. But if we get 2 bullish candles, this then becomes the point which created the new low. It's very important to understand that you need those 2 candles, 2 or more. It doesn't have to be 2, but it has to be 2 or more. So I hope that makes sense. Okay, good that you had bullish as well. It means that you were taking into consideration, obviously, still that first high. But yeah, it's always good to double check and make sure that, you are on the same page here. Because I know, obviously, when you have similar highs or highs which were formed a long time ago, which were never exceeded and are still the current highs, then it can be quite hard to determine, okay, do I use this high or do I use this high all the way up here? Or, where do I actually establish my bias from? And that's why I say normally you must look for something where you can at least see 2, look for a high or low, it doesn't matter where it is, but I always say look at probably the most recent one. And then if you can establish 2 structural flips, once locating the high or the low, then okay, then the latest market structure which you establish is going to be the most relevant. So what I would say in this situation is some people may have been thinking that this is going to be the high and then this is the point which created the high, and that we would get all the way down to this level down here. And then we're going to be bearish in market structure. But this is still the high which was created. You can see that was never exceeded, and nor was the point which created the high. Maybe share charts? Yeah, no problem. Just send through that chart link. I'm not too sure if the charts are working on TradingView yet. You might just have to send those last few digits, the last few letters, and then I can check out what you have there. Otherwise, alternatively, just join the Telegram group. It's free. The link is in the description. And then send the full link in the Telegram and I will check it out. That's the only kind of alternative I've found for being able to check charts out for you guys. Because I don't know why, but whenever I do try paste that barcode over here, it just says, invalid chart. Okay, I see that you have joined here, Mike. Let me just get this chart Okay, that is the link for this current stream. You have posted it here. Okay, so you are looking at pound yen on the 5-minute time frame. You have some letters here written out, which I have no clue what they stand for, but I'm sure you're going to be able to explain those to me. And you are currently in a buy, stop loss based on this support level, TP based on this level up here. So yeah, I'm going to probably need some explaining as to what's happening here. I can see obviously we have, well, when this was taken, we had broken out of that range, which again we have at the moment. Obviously this is a brand new candle forming now, so you can see, guys, we are obviously pushing quite strong bullish at the moment. Let's see how this 1 hour candle closes possibly, but yeah, you're gonna have to explain to me this EQH and this FEG stuff. Unfortunately I do not, or maybe fortunately, I don't trade like that. So yeah, but nice chart, and thank you for joining the Telegram, and yeah, feel free to send whatever you want in there, as long as it is more or less trading related. Quite interested to obviously see how this GJ candle closes, if we're just gonna go, or if we're gonna have this nice strong bullish candle close. It's gonna be quite tough to wait this 20 minutes to see if this closes, but yeah, again, also not really interested without the candle close and taking it. Obviously if I miss a trade during a London session, guys, I will then be looking during New York to see possibly a New York stream coming today as well, so I'll let you know on the Telegram. Solid liquidity breaker market structure on the 1 minute, enter on the open of the last bearish candle, liquidity gap. Okay, well, I hope it works out for you. I'm gonna be waiting for a 30-minute candle close based on the marked out resistance level. If we get a 30-minute candle close above that resistance level, I'll be more than happy to then start looking for some entries above this 30-minute candle once we've had a retest of this zone on the smaller time frames. So there'll be resistance turning into support on maybe the 1 minute or the 5-minute time frame. Respecting candle lows obviously is a huge factor as well. We need if we're looking for buys, we want to see the respect of the candle lows and not respecting candle highs, because obviously that's an indication of buyers being in the market way more than sellers. So then obviously we got the clean candles to the left. If we do get that close, it'll also be a 1 hour candle close above this level, because you can see this 30-minute candle is going to close with this 1 hour candle. So that's going to be an extra added confluence that we are not respecting this level of 1 hour resistance. Then obviously, again, I'm waiting for the next candle to wick down and continue bullish. So for me, candle closes is a huge confirmation, especially when it comes to levels of support and resistance. If we're taking a trade based on this breakout here, what we're expecting is to, at much later stage, come back and retest this zone, as opposed to retesting it now and then going. So that's where the waiting comes in. This 15-minute candle closes in 4 minutes. Obviously you can take a similar type of trade based on the 15-minute time frame if we're not going to respect this level of 15-minute resistance, and then the next 15-minute candle wicks down and we continue bullish. But again, guys, 15-minute time frame similar to the 5 minutes and the 1 minute, very low confirmation. The 30-minute time frame is probably one of your stronger confirmation, lower time frames. Obviously, without the higher time frame you go, the more, or the higher and stronger the confirmation. So if you have a 4-hour candle closing below a 4-hour level of support, or 4-hour candle closing above a level of 4-hour resistance, that's a much stronger indication that price is going to continue in that direction, or rather than a 30-minute or 15-minute candle. Tiago, what's up? Long time no see. Hope you're doing well. Hope you've been keeping well. Astro Creep, how are you doing? Welcome back. Been a while since we. Well, I think the last time you were in this chat, you told everyone to short GJ, and then it went up like 90 pips. Yeah, nice to see you, Thiago. GJ is looking good, but it looks like it's, you know, goners. Or in the process of being goners. It's already moved 5 pips. So again, guys, this is where that FOMO comes in. If you're looking at GJ now and you were waiting for the candle close, and this is a good lesson as well. If you were in GJ waiting for that candle close, you would have been expecting this candle to not move or push too much and for us to close around this level somewhere and then retest this zone. Now that GJ is already pushing, so basically the entry in this situation was most definitely going to be on the impulse, right? So if you're taking the entry based on the impulse, what you then got to start realizing is that you need to not hesitate and take that entry at this level or at the break of your marked out zone. If you're now looking at this and thinking, you know, oh my word, I missed the entry, or I'm missing out on making money, my friends are making money, other traders are making money because they're in this trade. I mean, Mike just sent me a chart just now, which is he's in this trade, and I have absolutely like no FOMO, no jealousy, no nothing about someone else making money and me not being comfortable enough to take the trade. So if you have now decided to take entries at these sorts of levels, you are a greedy trader. Because what you can't accept is that you missed the move, you didn't get the setup you wanted, and you are not happy with, you know, other people making money, and you're trying to make that money now. Because these entries up here are your FOMO entries. Here, here, and here. The correct entry would have been at the break of these wicks. By this stage, I would definitely be trailing the stop loss. Yes, Stanley. So originally it would have been, for me, at technical levels, obviously going to be below your 15 or 30 minute candle. So at this stage, once prices already moved this much, you should definitely be shifting your stop loss to below 5 minute levels. So whether that's going to be the previous 5 minute candle or the current 5 minute candle, either or. But yes, you can shift your stop loss for sure. Type A, exactly. This is a type A entry, or also known as an impulse entry. So what you have to be comfortable with this is, obviously there was not even a bottom wick on this candle, and then price just went straight through this zone and didn't have the candle confirmation, or didn't have many candle confirmations based on the 30 minute or the 50 minute time frame. Well, confirmations that I like to see. 35 pips in profit. Well done, Mike. You did as well call this, well, call it slightly before you entered the trade, so good on you. Hope that it does continue up to 154.547. That would be nice for sure. Definitely has the capabilities of doing so, especially with the clean candles to the left. Astro Creep says he's also 35 pips up, maybe in his dreams. I'm not too sure about that one. Can't take you too seriously after that call you made that one day. Gold also still just ranging a little bit. So yeah, again guys, if you are in this GJ trade, if you did take the impulse entry based on how our zones are marked out, and a lot of the guys in the Telegram had the exact same charts, your impulse entry would have been either as we cleared this 154.173 level, or if we cleared this wick, which would have been at about 154.205. Those should have been your only two entries, if not earlier. So obviously if you're basing it on the lower time frames, but I don't think a lot of us trade like that, then you should have had one of those two entries. And in that case, you probably would have been up at least now about 14 pips, meaning that your stop loss should now be at entry for sure. You should also hopefully have secured some of your profits. If you took entries at any later stages or are currently thinking about taking entries, it's not really not a good thing at all. You have missed the move if you haven't taken it by, you know, these early sorts of breaks. Because although what may happen is, although even if you took an entry at this point and price does eventually come up here, there's going to be 9 times out of 10 times where price will maybe move up 7 pips, but for the original entry people it was maybe 15 pips, and then price starts coming back down, and then you start holding drawdown while everyone else has secured their positions. That happens 9 out of 10 times. So even if price does continue up here, and you know there's people who were taking entries up here who still end up making some money, if they try to do that again and again and again, you'll see the losses they start taking. Another definite possibility out of this, and this is what helps, or at first can help a lot of people with FOMO, guys, is let's say we get a nice strong bullish move like this, which is what we like to see. We like to see big moves in the market because what big moves provide us with is possible big moves later on as well. So let's say now we get a nice strong bullish push now, and then we get a bit of a pullback. What we can then do is wait for an entry to retest those highs. And that's what's going to be able to help a lot of people deal with FOMO, is knowing that, okay, we may have not got the original move, but we can always get another entry, get that second push up to retest that high. Because remember what I said, guys, 80 or 90% of the time you will retest a high or a low after it's being created. And if you think that there's only one opportunity a day per pair, you're also wrong. So this may have been the first good opportunity of the day, but there should be at least one more. Usually, also 90% of the time. Gold is moving pretty slowly at the moment. We might have some nice strong pushes in between, you know, this London Open, and then by the time we get to pre-New York or New York Open, we should have some volume coming into the markets, and by then we should have maybe established, based on the daily time frame, if we're going to be continuing this strong bearish push, or if we're going to start retracing from this level of daily support and then start forming some support. Because then essentially what you could have is, you can see how we have been forming our higher highs and higher lows. And obviously we had a strong bullish push, and now maybe we could just be forming our higher low to then continue bullish. But what we need to maybe see for that is a nice form of a daily support, or just some higher time frame support. So maybe 4-hour support, daily support would be nice. So we do need to see that. Have you always only traded these two pairs? No, at the beginning I used to trade a lot more. Used to trade a little bit of indices as well, but became much more aware of, if you understand, or it's a lot easier to fully understand how 1 or 2 pairs work as opposed to 10 or 20 pairs. It also makes you trade a lot less. So overtrading, we all know, causes a huge amount of losses and can be one of the lead causes to people blowing accounts and that sort of thing, or being stuck in loss. So if you obviously are looking at 20 charts, you're going to see a lot more possible opportunities than if you're looking at 2 charts the whole time. I also know pretty much based on the past however long that GJ and gold work in a particular way, and by understanding that, or I've only managed to gain that understanding by only looking at these 2 pairs. I always use the example of when you go to university or school or something like that. If you could only, if you had to retain the information from 10 classes, or 10 courses, should I say, 10 subjects or 2 subjects, and then they tested you at the end on the 10 or just the 2, which one would you be able to do better in? Probably the 2, because it's a lot less information, so you're going to have more time to spend making sure you know that information correctly. Whereas if you have 10 subjects to learn for, and you're getting tested on all 10 at the same time, it's going to be a lot tougher to retain all that information and have such a good understanding of each individual subject. Same way as currency pairs works. These pairs all work at a certain time in a different way during different times of the year. Cheers, Mike. I will see you tomorrow. Well done on your trade today. So yeah, definitely less is more approach, guys, in every aspect of trading. Try to choose 1 to 2 pairs to trade. Try to stick to 1 to 2 trades a day. 2% maximum risk per trade is what I go by. What else do you have? Try to choose 1 session to trade, and definitely don't become one of those people who tries to trade every single session. I know sometimes trading 2 sessions can be much better, especially if you don't get a trade in your actual trading session. So for me, my main session is London. London suits me the best. It's in the morning for me. I can get all my trading stuff done, and then I can actually focus on my company rather than, always trading. So I can focus on that sort of stuff. Whereas if it comes to trying to trade every single session, I'll never be I never have been the type of person to be controlled by the market. So I've never had to wake up at 3 o'clock in the morning. Like, there's this huge stigma around trading where you have to wake up in all hours of the night to watch your charts and things like that. If you do that, then you're again just getting controlled by the charts, and things are never gonna really work out if you do that. So you need to control when you trade. You need to be in charge of your sort of schedule and your routine. I would say 1 session is perfect. You don't actually need more than 1 session, especially if you're happy to take 1 trade a day, 2 trades a day. If some days you don't get a trade, other days you might get 2, so there's your day made up for. Obviously, if that doesn't work, I understand 2 sessions, but 2 sessions is as far as I would go. I would not trade more than 2 sessions, because then it just becomes you staring at a chart all day. You take a loss, you start overthinking, you start worrying, trying to make that money back, and you just dig yourself a hole. So yeah, that again plays into your less is more approach for sure. And then obviously with the less is more as well, risk management. The more you can manage risk, the less you're going to lose. So yeah, nice strong push on DJ this morning. Nothing too concrete about the confirmations, but yeah, again, well done to anyone who did take that trade. Not my type of trade. Wasn't really, normally for me, impulses, I need to have at least a 4v0 market structure. So if we have about 4 of the key time frames bullish or bearish market structure, then I'll feel a lot more confident with the impulse. In this case, I think we had a bit of we were bearish in market structure on the weekly. Obviously that did end up flipping bullish, and then we had our bullish daily market structure. Our 4-hour market structure is also bullish at the moment, and then our 30-minute market structure is currently bearish. So at the time of the trade, we had a bit of a mixed market structure. Obviously, I think by the looks of it, we are starting to probably lean more on the bullish side than the bearish side. Now we currently have a 3v1. Obviously, if we can get back above these sorts of levels, we will be bullish. Am I crazy if I think you can trade GJ with the next 30-minute candle? Depends what you're looking at. Obviously, we have made a very strong push. So there's a good chance that we're going to see maybe a bit of a wick down. Maybe that's going to be a 50-minute bearish candle or a 30-minute bearish candle. Then maybe we can see a bit of a continuation. But then we also got to see, okay, how much range do we have to trade into? What are our clean candles looking like? We've got about 15 pips. So what I would be looking for is if we form some resistance at this level, maybe a 30-minute candle, so the next candle, and then break that, I would say, yeah, it would be fine to maybe, if you're looking for that bullish continuation. Otherwise, I don't see too much opportunity to take a trade on the next candle. Remember what I always say, guys, is if you see a big candle, what you want to be thinking is, I needed to get in that big candle at the beginning of it. I don't want to be getting into, once this move's already done, I call it crumb hunting. So you don't want to be looking for those last few moves. Like, again, what I said was you're going to have those people with FOMO who are taking trades at these sorts of levels, and then they realize or don't understand why they're not doing well, because the move, this was your move up, or even for the riskier traders within this range to go up. And if you're looking for a sell on the close of the resistance, you will need to look for at least a 15-minute candle forming resistance at that level, and then obviously maybe a 5-minute candle if you're going to be really risky. You know, you look for some 5-minute candles forming at this level and then take that sell down. But I think, again, I don't like to see lower time frame confirmations. I prefer to see 30-minute, at the very least 15-minute candle confirmations. After securing 80% profits, how long do you let the runner go for, or do you secure again? So I always look at the amount of range which I have. You can often base a runner on the higher time frames. So if there's 30-40 pips of range, I'll try to let that runner run as far as possible. It is really good to remember though, guys, runners, I would say 70% of the time a runner does get stopped out at break even, and then it's only on the odd occasion where you'll have a runner which makes you a lot of money. And then obviously that's going to be based on how much range you actually have to trade into. So if you are trading a tight range of, let's say, 15 pips, the runner's not going to do very well. You may as well close your full position. And if you're trading a much bigger range, so let's say you're trading into a 40 pip range and you secure at 15 pips your 18%, you can try let that runner run to about 30 and then maybe secure some more, maybe another 10%, so then you have 90% off the table, and then let that remaining 10% run as far as possible. I had, towards the end of last year, a runner which ran 600 pips. Was it 400? It was 400. It was 600 total because I had two positions. The one definitely ran over 400, that's for sure. And that was GJ buys, which I took on stream. It was an impulse entry at a very, very nice price, and it was at London Open. I don't know if any of you guys remember that. I did post it a couple of times in the Telegram though. But by the time you have that runner at such a far point, the position which you have left in is so small. We have about 5 minutes left in the stream, guys. I don't think that there's too much happening. Let's see how this 30-minute candle closes and the beginning of the next 30-minute candle. I just want to see how that forms. And then we can just quickly go over what we're going to be looking for the rest of the day. Obviously, if you aren't already part of the Telegram, please do join it. There'll be, so we always chat a little bit about what we're looking for, especially coming into New York, because obviously there aren't always streams during New York. It's definitely something which is going to be changing. We're going to be doing a lot more streams for New York, and just suits a lot more people a little bit better. So we have had obviously this very nice strong bullish candle close now, so that could be setting us up for the rest of the day. Obviously we want to see us maybe get up to this sort of a level, come down a little bit and maybe retest the highs, or if we're going to now continue bearish, we want to see respecting the high of the previous 30-minute candle and then forming some resistance, and then we can maybe retest this low. So those are those kind of two scenarios I'm looking for in GJ. If we look at the higher time frames, it's going to be quite hard to find any really solid entries for some long-term moves. But I would say, I mean, this 4-hour candle closes in 1 hour. So what you could be looking for based on the 4 hours, if we form this 4-hour support, if the next 4-hour candle breaks the high of this 4-hour candle to retest this 4-hour high which we had created, that makes a lot of sense to me. That's going to be about 34 pips. Remember, when you base your trade on the 4-hour time frame, your stop loss is going to have to be below the 4-hour candle low, the new 4-hour candle low. So let's say the new 4-hour candle wicks down and then breaks the high, your stop loss, technical stop loss level, is going to be below the low of the current 4-hour candle. For that, obviously I want to see some support form, because then again you have your break and your retest over here. That's going to be previous level of 4-hour resistance turned into a new level of 4-hour support. So that's your break and retest based on the high time frame. So I've been taking a couple of trades based on the 4-hour over the past couple of weeks. Very, very strong confirmation time frame, and yeah, really, really nice time frame to look at. Obviously, I think a couple of people might be looking for buys above this level. We have a 15 pip range up until 154.546. If you are going to do that, just be aware that we have made quite a strong move already, or from all the way down here. So please do be aware of that. I'm in two minds, but I just don't think that I want to get involved in a move so late to continue bullish. It's already, again, this was the candle to get involved in, not these sort of scraps up until this level. So by how candles are forming and printing, the buy makes sense. We obviously have the clean candles to the left. It's just not at a very, very good price either. So buying at this level would have been much more safe. But we are moving quite nicely. So again, not in this buy, guys, but if you are, stop loss below this candle. I'll be closing half if this candle flips bearish. Remember that, that's always an important one. And then you can manage the risk even further if you want by dropping down to 5-minute time frame, 15-minute time frame. Obviously this is a brand new candle, so there is only going to be about one candle which has made it up so far. So yeah, that is my outlook on GJ, guys. If we look at gold, I've marked out a pretty decent selling level. You can see we have some clean candles, which is also a wick on the 1 hour and the 4 hour, but on the 30-minute it's some clean candles, so some easy price action to trade into. We are bearish in market structure, very important to remember. So if we get below this level candle close, we can definitely test this 1807 level. It's about just over 20 pips, yeah, 25 pips. So a really good range to trade into, might be worth even waiting for that candle close. And then obviously if we're going to continue bullish, I think very risky buys above 1817, but much safer buys above 1822, because that is our 1 hour and 30-minute structural level flip. Remember, this is our low which we've created, this is our 2 candle pullback. So that will be where we flip structure bullish. Other than that, you know, that's only 2 pairs that I trade, guys. So if you are interested in taking any of those, just do be aware of how to manage risk. Something that's very important. Just looking at GJ now, it could be running out of a bit of steam and going to be maybe forming a couple of bearish candles. So let's just wait and see. Other than that, yeah, please, if you haven't, guys, joined the Telegram. It is free. Link is in the description. Please like it. Leave a like on the stream as well. Also free, helps out a lot. And I hope that you all have a great rest of your day. Possibly a New York stream today. I just need to go out now, get some stuff sorted out, and then if I'm back in time, I can do that for you guys. It might be just a quick one, just a New York Open, and then maybe 15-20 minutes after that. And then yeah, please, I will chat to you guys tomorrow. I will be streaming again tomorrow, so let me just close all this up. And then yeah, thank you guys very much for the stream. I do appreciate all the support as well, as always, and chat to you guys on Telegram, and have a great rest of your day for sure as well. Cheers.